Today, let's talk about a battle of epic proportions happening right now in the global dental industry. We've got two absolute titans going head-to-head, fighting for a market that is, frankly, mind-bogglingly huge.
Just wrap your head around this number for a second. 220 million. That's how many people every single year need dental implants but don't get them. It's this enormous, untapped opportunity that's fueling this entire conflict. Both of these companies want the biggest slice of that pie. So who are the players in this game? Well, on one side, you've got Envista. They're known for being absolute experts in operations, super efficient, super lean. And on the other side, we have the Swiss powerhouse, Straumann. Their bet is totally different. They're trying to build a complete digital world, an entire ecosystem for dentists to live in. Two very, very different strategies aimed at the exact same goal. All right, let's kick things off with Act 1, growth. It's the engine of any business, right? But as you're about to see, not all growth is created equal. Not by a long shot.
You know, it's really easy to just look at a company's revenue and say, yep, it's going up, everything's great. But the real question, the one we need to ask, is how are they growing? Is it sustainable? Is it coming from genuine demand?
Okay, so take a look at these numbers. What's really telling here is the type of growth. Straumann is pulling in an incredible 8.9% in organic growth. That's the good stuff. It's growth driven purely by people wanting to buy their products. Envista's got a solid 6.3% for sure, but it leans a little more on things like volume bouncing back. And it's not just us saying this. Check out this take from the analysts at HDIN Research. They're pointing out that Straumann's growth just seems more durable, you know? It's built on a powerful brand that lets them charge premium prices.
Okay, so growing is one piece of the puzzle. But what about actually making money from that growth? That brings us to Act 2, where we're going to look at who's better at turning sales into actual profit. Really? It all boils down to this, doesn't it? It's not just about what you make, it's about what you keep. So for every single dollar that comes in the door, who actually pockets more of it? Let's find out.
And wow, the difference is pretty massive. For every dollar of stuff they sell, Straumann keeps almost 69 cents as gross profit. Envista, on the other hand, keeps just under 55 cents. That is a huge, huge gap, and it tells you everything you need to know about who has more pricing power.
So why the big difference? Well, it comes down to a few key things. First, Straumann absolutely dominates the high-end, super profitable implant market. Second, for Envista, more than a third of their sales are from things like equipment and consumables, which just don't have fat margins. And finally, Envista is just more exposed to things like tariffs and currency swings.
Okay, quick pause. We're going to use a term you hear a lot in finance, EBITDA. Sounds complicated, right? Don't worry. All you have to do is think of it as a cleaner way to see how much cash a company's core business is actually generating before all the accounting and financing stuff gets in the way.
And this brings us to what might be the most important part of this whole story. Act 3, the battle for the digital future. Dentistry is changing fast, and whoever wins the digital race is going to win the next decade.
And here we go again, seeing their completely different game plans in action. Straumann is trying to build the whole universe, an open platform called AXS that links everything together, and they're buying up tech companies left and right to do it. Envista's approach is more focused. They're doubling down on their DTX software to make the workflow for their existing brands as efficient and seamless as possible. And a gadget like this is the key. This is Straumann's Trojan Horse, really. Once a dental practice buys the scanner and starts using the software, they get pulled deeper and deeper into the Straumann world. It creates a powerful lock-in that makes it really hard to ever switch away. But hold on, it's not all clear skies and easy growth. There's a major wild card in play, a real storm brewing overseas, specifically in China, and it's all because of something called VBP.
So what is this VBP thing? Basically, it's the Chinese government stepping in and playing hardball. They say, look, we'll guarantee you a huge amount of business, but in return, you have to give us a gigantic price cut. Now, this is fantastic for lowering costs for patients, but for companies like these, it's a direct and painful hit to their profit margins.
And that kind of risk is exactly why you need a strong foundation. A brilliant strategy means nothing if you don't have the financial muscle to back it up. So for Act 4, let's do a quick financial health check.
So let's look past all the big strategies and the flashy new tech for a second. Let's look at the books. Which of these companies is actually standing on solid ground?
Whoa, okay, look at that chart for Envista. That huge blue slice, over 40% of their assets, is something called goodwill. Think of it like this. It's not a physical factory or cash in the bank. It's an intangible number on the books representing the premium they paid for companies they bought in the past. And that can be a real risk, because if those businesses don't perform, that goodwill value can get wiped out, causing a massive loss.
And then you have Straumann. It's like night and day. Their net debt is basically zero. They have what you'd call a fortress-like balance sheet, with almost as much cash on hand as they have debt. That gives them incredible power and flexibility to invest, to acquire, and to handle any economic curveballs. So, we've compared their growth, their profits, their big strategies, and the state of their financial books. It's time to bring it all home for our final act, the verdict.
So what's the bottom line from HDIN Research? Well, they see Straumann as the leader here. Better growth, more profitable, and financially stronger. They see Envista as a master of efficiency, no doubt, but one that's fighting an uphill battle on margins. The conclusion is that Straumann's bet on a complete digital ecosystem seems better suited for the future. And the next big fight, it's going to be over winning huge contracts with these large consolidated dental groups, the DSOs.
Now, obviously, we've just skimmed the highlights here. If you want to dive into every single detail and see the full investment breakdown, the source material for this explainer is over at HDIN Research. You can find it on their website.
And that really leaves us with the billion-dollar question, doesn't it? As the entire world of dentistry shifts to be 100% digital, what's the winning strategy? Is it the lean, mean, efficient machine? Or is it the all-in-one, all-encompassing digital ecosystem? The answer is going to decide who owns the future of millions of smiles around the globe.